rupees 610 per share. What does the road ahead look like for the retail major, and how do valuations pan out from here on? To shed more light on this bumper listing, joining us on the show is Mr. Deven Choksey. He's Managing Director at KRChoksey Investment Managers. Mr. Choksey, always good to have you on the show. Let's start off with what your first reactions are. I mean, 610, yes, stellar listing was expected, but this is an over 100% bumper listing that we have seen. Your first reaction, sir?
Well, I think undoubtedly, I think the stock has created a good amount of buzz in the marketplace. And at the same time, I think given the kind of a profitable track record that they have demonstrated in this thinly margin traded business, I think it's something which speaks a volume about the business, the way in which they are conducting it. So certainly, I think the market has given a premium valuation to the stock, and I think this premium valuation of the stock is also justified from the point of view of two things. One, with the money collected through the IPO proceedings, I think we'll probably reduce the debt component of the company. And with the debt component coming down, the cost of interest comes down. And as a result of it, there will be, I think, a profitability growth which will be coming up in the current year. Second issue is about, I think, the growth in the organic business itself. The way in which the new stores are likely to come up in different parts of the country, I think that suggests that the company would easily grow the business in the range of 25 to 30% on CAGR basis for next 2 to 3 years. So from that perspective, the premium valuation is to an extent justified. However, I would rather like to buy the company given an opportunity at a lower valuation if market gives one, because I think it's always important, I think, to buy the stock at a value when it is available. And that's where I think one will have to wait and probably, I think, start accumulating at relatively lower price compared to what it is right now. Or maybe I think if the time drag takes place, probably I think at a little later point of time one could buy, even if one can't get at a lower price. So either the price correction or the time corrections, in which I think one should use this opportunity to buy into this stock.
Right. Mr. Choksey, we've spoken to you about the kind of business model and the revenue profile of D-Mart compared to other players. Now, if you take a look at V-Mart or even Trent or something like Future Retail for that matter, can you speak to us a little about how different the revenue profile for D-Mart is? Because over 50% of the revenues are attributable to food, which is, I'm assuming, higher volume and lower margin, but it gives them a consistent accretion to free cash flows and is a constant subdued cash generator. So that's likely to continue and yield stability in terms of ROEs, especially given the fact that they've even pared down 1,080 crores of debt.
Yes, I think you rightly touch upon the point about the revenue model of the company. 60% plus revenue comes out of the food and the grocery segment, and that too they are very smart in putting this entire segment into the business. Wherein on one side you generate a larger volume by way of selling goods at a discounted price to the large users. As a result of which, I think it becomes a pure volume play. And because this volume play, I think you are in a position to source your material at a cheaper cost. Plus, the company has been following payment on cash basis to the suppliers, which means that I think they would get the discount for buying upfront and paying upfront money. As a result of which, this is basically resulting into better margins. So if you look at the large volume and the margins that the company is generating, it explains everything that the company is basically following a successful model. At the same time, they are sweating their assets maximum. The kind of load space on which you are basically incurring the infrastructure costs, you are generating larger amount of volume in the business, and that is generating better profits. So yes, it's a thinly margin traded business, but if you carefully plan your business, I think you end up generating larger amount of success out of this business, and that's what the D-Mart business is all about. So I think one will have to attribute a larger part of the growth possibilities and the potential to this aspect.
Right. And Mr. Choksey, finally, if you can tell us that what your expectation is in terms of revenue and operational profit CAGR going ahead from here on, what the company's targets are in terms of, or what you think it could be in terms of new store accretion, because the company has been very rational and nimble-footed in terms of expansion as well. They have never been overheated ever since they launched.
Yes, and that's an important point, because I think the company has basically shown the character of growth on a sustainable basis. I would for one think that I think 25% kind of a CAGR growth in the revenue and 25% kind of a CAGR growth in earnings is distinctly possible in this particular business, particularly because they have already established a good amount of footfalls in existing stores. And with the new stores coming up, I think they have the similar kind of an approach wherein they are basically sweating their assets to maximum and generating larger amount of profits. Once you have a larger volume to back you up, you have the advantage of buying the material at a cheaper price, competitive price, and that gives you the advantage of margin as well. So that is where one gets confidence that the company would be in a position to maintain the earning growth, I think at a CAGR of 25%.
All right, Mr. Choksey, we're going to leave it at that, but really appreciate you joining us with your quick take on the kind of stellar listing that we have seen, what you feel in terms of valuations after this kind of bumper listing, and what your outlook is on the fundamentals for a DMart and in terms of its expansion trajectory as well. Let's take a quick break. On the other side, we'll also extend the spotlight on other retail players who are riding the euphoria of DMart's entry over a period of time. To discuss that and much more, Chairman and Managing Director